Good morning and welcome to the market forecast. It's the beginning of another week of exciting trading going on. Monday, February the 22nd. My name is John Hoagland. As always, thanks for trusting me with your time. We're going to be looking at these markets through a consistent lens for context and the lens of risk management. Also, extremely important. There isn't a trade that I don't look at the risk first. As far as economic numbers due out this morning at 9 o'clock Central Time, we have the misleading indicators due out. That's what it says on my calendar. There's nothing really important that we have to worry about in that regard here this week, or excuse me, not this week, today. Tomorrow we have some housing in numbers coming out, consumer confidence. We also have Chairman Powell speaking in front of the House of Representatives for the next 2 days. That's Thursday and Wednesday. As far as Wednesday is on 9 o'clock, new home sales comes out as well as the crude numbers. As far as this week is concerned, the only numbers that Step 2 or funded accounts will have to be paying attention to and be flat for will be the petroleum status and the nat gas numbers, and those are on Thursday. Also on Thursday, busy morning on Thursday, 7:30 a.m. Central Time, durable goods orders due out, GDP preliminary due out, as well as jobless claims as typical on Thursday. And then on Friday, international trade in goods. That's an advanced number that might do something, and then personal income and outlays. Those are both out at 7:30 on Friday. Earnings, kind of a shorter list today. Probably the most notable one should be out already this morning. I haven't had the chance to look, but Berkshire Hathaway, the biggie for today. As far as news is concerned, our U.S. stocks start to feel some of the pressure of rising bond yields. A lot of more expensive borrowing for a lot of these companies coming up the pipe here, it looks like. We also have the stimulus vote coming to the House of Representatives this week. So a lot of folks are, of course, keeping an eye on that as we try and continue and grow this economy as COVID hopefully begins to go away. U.S. stocks futures falling this morning already testing some pretty important inflection levels. A lot of research over the weekend, and we got some pretty important areas where we are looking for support or a possible change in market state in our equities. Of course, we'll look at those charts here this morning. Some difficulties in the aeronautics industry. Boeing stocks are lower this morning after 2 flight incidences with no fatalities occurred over the weekend. I guess the FAA has asked everybody to ground these 777 aircraft, but only the ones with a particular engine made by Pratt and Whitney. So not all of them, just specific ones with a specific engine. Apparently, both of those engines had something to do with the issues over the weekend. Thank goodness there were no fatalities. Crude prices have been consolidating. They're a little moving to the upside here this morning. As Texas thaws, of course, we are continuing to hope for the best for all of those suffering that very unusual weather and the problems that it has created. There's going to be some trouble for a little while, it looks like. Russia is kind of pushing to pump more crude, as well as the Saudis are considering reversing their 1 million barrel per day output cuts that they were going to be planning on keeping through March. So perhaps, a little downside pressure in the future, but this morning things are looking pretty good to the upside in crude oil as far as I can see. Always remember to like, share, comment, question, feedback, and heckling are always welcome. Make sure you subscribe to our YouTube channel so you can get notifications when we do go live. And taking a brief look at the VIX and the Dixie before opening up the program this morning, the VIX is up around 9%. Obviously, with the equities looking to the downside, we're going to see that spike in VIX, a little bit of a fear factor perhaps coming into the markets. And then the dollar index back around 90, or just above it, 90.19. Dollar continues to be weakening over the past week or so. It's Monday. Typically, not my best trading day. I try and take it easy and get into the week as the week goes on. We've got some opportunities here. Of course, we're going to be looking to see what these opportunities do look like. Good morning, MSS Capital. You're the first one in the room. You win the prize again today. Good morning, Ralph, Will, Bill, Prophet, Eon, Andre, Murph. Good morning and happy Monday to everyone. Hope your week is as great as mine is going to be. Always so positive. I love that about you, Murph. Happy traders make better traders. I'm sure you'll all agree with that. Danielle Guten Tag, Brian D, Felix Escobar, Rational Investor. Good morning, Brian and friends. Gino, good to see you. Troy, Jason Bulldozer. Good morning, Tanya. My brother Rick, good to see you this morning. I wish I got to see you. Laura, Oleg, Ashton, Danny, Rob, Mike. The chef is in the room. Hive Minding. Haven't seen you for a while, Hive Minding. Thanks for stopping in and saying good morning, Angelina, Rod, JD. Good to see you, Michael, James. Good to see you, Sharon. Good morning, John, Emma, from London, England. Well, pip pip and cheerio. Dark Tan Man. You're Jason Vast Shady Trader. I'm going to put the link in for group coaching this Wednesday. Always enjoy that. You get to spend some time with everybody and answer any direct questions you have. We take an hour at 1 o'clock on Wednesday, Central Time, of course, and register. Come on, hang out with us for a little while. We'll see what we can figure out. What we don't know already, we're going to try and learn together. So on that note, why don't we jump into the charts here? I've got everything stable this morning. No gremlins have shown up yet. Let's take a look. As always, starting with the daily in crude, and we've got crude oil moving to the upside here, even before the regular trading hour open. The rollover is ending. We've got a full week ahead of us here. We've had a pretty substantial drop in open interest, perhaps some long liquidation, but a 53,000 contract drop in open interest I'm going to be suggesting is more rollover related than anything else. Today's the last trading day for the March contract. Make sure you are trading April, of course. The March contract is going to be very thin, and you don't want to be stuck in any positions at the end of the day. So make sure you are trading April crude. We moved last week. Upside digestion state. We obviously the market balances, moves, balances, moves, balances, moves. Are we in one of those levels? We've got an important inflection point here at 60.70, which is our weekly kickoff high, and that's going to be somewhat pivotal for us this morning. We are right there as we have opened up. It's going to make for an interesting morning. Take a look at the 30. Okay, maybe we've got some overnight longs, but before the open here, we have taken out our overnight high. We are, perhaps reaccepting inside Thursday's area of value. Again, this is an important level here, and let me make sure I'm right on that. Yeah, 60.70 is a level that we're looking at possibly another push for longer time frame traders to need to or want to adjust inventory. That's what these numbers are for. So we're right back up here at 60.67, 3 ticks off of the weekly kickoff low. This might be providing an opportunity for us. Don't forget, we're a little bit long in the overnight session, shorter time frame, weaker hands money, getting paid for now. If they get the idea that that's not going to continue, then we may see this move back towards value from Friday or move back down to settlement. Looking at this morning, it was like, okay, I'm just going to try and stay patient because we were hanging out in the middle of value from Friday. Not a big change in open of the perception of value of crude oil. I think that this move up to this weekly kickoff high on the open here gives us a relatively decent early opportunity. Can't see if the opening range was the low of the session here. Gonna go with probably not. It was, if it is, it's a pretty substantial opening range and something I probably wouldn't be willing to risk that much on. So stay patient. It's only Monday. Let the market come to you and tell you what your opportunities are and when they are. If you're looking for trades, you're going to find them, and they may not be the ones that you're going to favor the most. E-mini S&Ps, we had a test of weekly kickoff low in the overnight session, 38.58. That remains the same as last week. Our weekly kickoff high is also the same. We're looking for this market to find support at this level. And like I mentioned on the opening, that there's a lot of people discussing this area here between 38.70, 38.60. This whole area here has a lot of people talking. So it's going to be an interesting way to, even if we don't participate, learn something about what that means when there's a lot of people looking. We lost 11,000, actually gained, I should say, 11,000 on Friday. Volume seems to be holding, but maybe that's because we're just kind of drifting off to the downside a little bit here. Our upside tempo just slowed a little bit. We're basically going to be kind of abutting against this previous high here, our weekly kickoff low today. So, this offers us some opportunities, some visual opportunities, and that's what happens is, traders look to a certain level and they actually end up making price trade down to that level. So, again, looking at the longer time frame, it's still holding upside structure. This would just be a simple first step at a break in upside structure. There's still lots of things that we would be able to repair down below without really breaking our long time frame upward momentum. Take a look at the 30. This is what we're really kind of interested in because we're day traders and we have our longer time frame information, the things that we've looked at. I'm trusting that all of you have found that you've done your homework last night. You looked at the weekly charts, you looked at the daily charts, you put together your hypotheses as to what you think might happen, and when one of those hypotheses begins to come true, that's when you start to act. So right now we've got settlement up here at 39.03 even. We've got some overnight shorts in this market. We've had some consolidation in this area. Is that going to be enough to even out the inventory? Well, that's debatable and subjective, but one thing's for sure: if we have some shorts that have gotten in poor trade location and they don't get what they're looking for relatively early, they may start the fire that could bring us back up towards a gap close. Remember, we have gaps, we have gap rules. We're looking at that support just below at 38.58. We got, within a couple of points of it here in the overnight. I'll look for another test of that, perhaps in the regular trading hour sessions for an opportunity. We are out of balance in the short time frame here. The opening range trade might be something that we might look into, on the open. That first minute of trade might be giving us an idea of buyer or seller control early in the session. At the very least, it could give us a 2 or 3 to 1 reward over risk opportunity. But again, there's no guarantee that the opening range trade is going to play itself out. All right. What else do I have here for this? Opening range, overnight shorts, gap rules, support below at 38.58. That's the story in the S&Ps. The NASDAQ, a little bit of a different story here. Now, the NASDAQ, we are currently below our weekly kickoff support level here. The NASDAQ has, been presenting itself as the stronger of the markets. This move down below this weekly kickoff low, which does remain from last week, I believe, 13,447, is a first break of a possible break on the of the upside structure. It's not a a fatal break. It's just showing a bit of weakness here, and it's showing a little bit more weakness because probably it has presented as stronger. No change in open interest on Friday. I find that kind of interesting. I bet you we're going to find a change in open interest today into one direction or another. Volume kind of maintaining. But that open interest, is not saying that there's a whole lot of folks barreling into short positions or accumulating long positions on this move to the downside. It's just, I'm calling it kind of an upside digestion area, even though it's not really consolidation. At some point, it might turn into one. So let's take a look at the 30. Again, the market. Here's our weekly kickoff low. Here's settlement. Here's all of our overnight inventory. Obviously, we're probably going to be opening with a gap. Here's last week's low. So this whole area here looks like a target-rich environment. If we get the opportunity, what once was support may come in as resistance. I know that there are those that don't really cotton to that idea, but with these weekly kickoff levels, we see it quite often. So we're going to watch. We're going to see this market. We're going to see if the opening range provides an opportunity, same as we were talking about in the S&Ps. If we can get a move up here to this weekly kickoff low and we don't scare our overnight shorts out of the market, this might be a decent area to look for an opportunity as resistance. Don't forget, all of these levels, anything we look at, anything we're thinking about taking a trade is subjective, and it's all more of a zone than a finite number. It's always great when you have a level that holds right on it. It doesn't happen that often. There's more of a digestion in the area, and then a move through or a move away. Try and stay patient. And our gold. All right, so we've got a pretty tight range for the weekly kickoff level here. I think this market is primed for a new interest, if you will. Have not seen that new interest coming in the open interest here just yet. We lost 3,000 on Friday. Our weekly kickoff low is basically the low from Friday. We've got another weekly kickoff high here at 1,800. We got 13 ticks through it in the overnight session, unable to really find any good direction from it here so far. But remember, we are in the market's time. The market has its own time, and we are looking at, I know that whenever I have risk on, time slows down. The market has its own time, and it doesn't care what we think about that. So we are, kind of inside the weekly kickoff levels. I'm looking at possible shorter time frame control in this regard. Volume and open interest lost on Friday indicates, possible short covering. Maybe some of the shorts that we're holding throughout the better part of the week got out of those shorts, and that takes buying power out of the marketplace. So this weekly kickoff zone up here with our overnight high and weekly kickoff high, I'm looking at that as kind of a target-rich environment. It may mean that we're going to fail here and continue to the downside. It may mean that we may reaccept and find moves to the upside. But all of these things are things we're going to have to judge using the consistent tools that we use. This is the 30-minute time frame here. Settlement all the way down here at 1777.40. Pretty consistent move to the upside here in the overnight trade. In the overnight trade, we don't see bigger participants coming into the marketplace. It's more shorter time frame, weaker hands. They started to get paid after the right on the regular trading hour open at 7:20, but that has kind of fallen off now. We're starting to see perhaps some longer shadows up here. 1,800 still looks like an interesting level. It's kind of a target-rich area here with our regular trading hour. I'm going to go with is our high here for the entire session. This just looks interesting to me. I'm going to be patient, and if I get an opportunity to see what the market does up here, it's not all that far away. We've got a couple of bucks to get up there, and it does seem like we're still seeing some buyers coming into this market. But we've got Gap rules. We have not closed the gap just yet, and if we can't close the gap, that tells us if we can't close this gap at some point, we're going to be looking for opportunities to buy weakness to perhaps have a breakout above that 1800 level. Let's take a quick look at the euro. Euro kind of consolidating and coiling, perhaps bringing some new energy into the marketplace. It's largely in balance, though. I mean, when you look at the high here and the low here, this is a month of time that we've been stuck between these two levels, and I think it's kind of boring some of the longer time frame, medium time frame, short time frame. Still some opportunities here. We did add 11,000 on an up move on Friday, 11,000 in open interest, I should say. Is that new participants? Well, it doesn't really show that much in the volume. If it's new participants and new open interest, we look for an increase in both. Is this a third contact on this trend line right here? Is this going to end up being resistance? Or will it kind of hold above it, and that should bring forth a test of our weekly kickoff high up at 12200. 30-minute. All right. We've got overnight longs. We did close the gap after the open. That's one thing that I'm a little bit concerned about for the upside. And if we don't see longer, stronger money coming into this market up against this kind of short time frame swing high or this short time swing high, we may see a decent move to the downside. And if we think that this market is inherently moving to the upside, what we would be looking for in that is a fast trade in the opposite direction, and we'd be looking for an opportunity to buy weakness for a slow trade to the upside. Okay? And the 10-year, we continue to see yields increasing, the yield curve steepening. That's all good news for the economy. And it is in rollover. We should be moving to the June contract either tomorrow or Wednesday. We'll watch the volume tomorrow and let you know which one seems to have the most volume. But certainly by Wednesday, the June contract will have the majority of the volume in all of the interest rate products. We have 169,000 increase in open interest on this move to the downside yesterday. And believe me, that's mostly rollover related. We've got an overnight test of our weekly kickoff low within a full tick of it. And we've seen the market kind of come back. So we're perhaps getting to an area where we're starting to look a little bit cheap for most of the participants. What does that mean for us on our 30-minute chart? Here's our overnight look to the downside. Here is our move back towards settlement. We got too short, back to settlement, back to inside value. Try and stay patient. Our extended trading hour session and regular trading hour session high, right back to settlement, right back to point of control. There's not a big change in the perception of value here. Be patient. Make the market come to you. Make the market give you an opportunity that is so cheap that you can't afford not to take it. Ladies and gentlemen, some of the best trades I've ever made have been basically because they were just too cheap not to take. What do you think of that? All right. We got about 5 minutes here. I got a couple of questions or comments here. Shady Trader, Hogue, side note, can you talk about the TPO charts and how to read them better on Wednesday's coaching? Shady, you got it. You've got it. I will write that down and put up, some. We'll give some good focus to that on Wednesday. The TPO and the market profile charts to me are just that consistent lens. And being a very visual person, I feel like they really paint a picture of what's going on in the auction process and in the market. So I think that's a great idea, Shady Trader. I'll look forward to seeing you there, and I'll get some things set up for us. Do you have the levels for IWM? I do not. Do you prefer time versus tick charts? I prefer time because in the auction process, the way we look at it, the way I look at it, time price is accepted in over time. Volume, of course, has a big part of it, but the TPO charts and the market profile charts I've been looking at for so long are based in time, and they're based basically off of a 30-minute chart. They're very related to that. So in the effort to make things and keep things consistent, I prefer that 30-minute chart. What do you think is going on with copper? Well, aluminum, copper, some of the industrial metals have certainly found some moves to the upside, I think that part of that is changes in industry, of course, and I think we're going to be starting to see some considerable moves in some of the other metals as well. Yeah, copper's over, what is it, $6,000 a ton. I don't know if that's when the last time that happened. So a lot of demand for it. Housing has been doing pretty well in this economy. Technically, it's set up for it. I was talking to my brother Rick, who was watching the program about 6 weeks ago, and I told him, hey, copper just broke out to the upside. So let's take a look at that. Okay, Shady. Yeah, you got it. Yep, value trade. Value trade for the win. Absolutely. All right, it's great to see everybody. It's only Monday. I'm going to step out on a limb here and say you may see Dan for the market recap. Haven't talked to him yet today. I think he's doing just fine, and I know he's looking back to getting back into his seat and seeing everybody. So you may see Dan for the market recap. Get signed up for group coaching. Tomorrow, of course, we will be presenting the Coach's Playbook after missing it last week. We do apologize, but we're looking forward to having a good one for you this week. And let's take our deep breath, man. Let's get into this week. Be patient. It's a long week. Lots of opportunities are going to be presented to us. We want to be there to take them. Take your deep breath. Stay humble, grateful, and creative today and every day in your trading. And we will see you for the market recap. Might be me, might be Dan. Same bat time, same bat channel. We'll see you then. Trade well.